All right, guys, Will Beach here with great trades. You can also follow me on Facebook at Free Stock Advice, and my Instagram is Great Stock Trades. Today, we're going to go over some of these breakout penny stocks that happened this week, along with the IPO, NIO, NLST, AGRX, INPX, and BPMX. Those are all bio therapeutic stuff like that. Usually they tend to break out at the same time, but it doesn't really mean anything. People, this is my own perspective. I've been doing this for a few years. A penny stock is a penny stock for a reason. They have great breakouts, great opportunity to make a lot of money. But with all of the forums I'm in, Facebook pages I'm in, StockTwits I'm in, there's a lot of new traders out there that really fall in love with these stocks because of what their potential is. And the fact of the matter is, it's like a girl, like, or a guy. Like, you don't date someone for their potential. You either they're either everything you've hoped for or they're not. So with that being said, I'm a technical trader, so I'm going to go off technical analysis, and that's what's going to tell me to get in and get out. And with my experience with penny stocks, is you really need to day trade them. So if you have an account under 25,000, make sure you always have an exit day trade available, because they're very volatile and they're going to go up and down very quickly. So with that being said, I'm going to show you some examples and why they do what they do based on the technical analysis side. I have AGRX pulled up first. This is just alphabetical. I always do my Fibonacci retracement, so I have an idea of supports and resistances, as well as what they've done in the last year. So you can see here, $3.43, all the way down to a low of 23 cents. That is the common theme in penny stocks, is that they're bottomed out, right? So when something's bottomed out, they have the opportunity for good pops to make a lot of money. However, they're still a penny stock. They're still not worth anything, and it's not worth staying in. So even on this daily chart indicator, you can see that all these indicators are facing downward, which tells me it doesn't want to keep going up, at least not right now. So when I go and trade these, I go off a 5-minute chart, so I can do a day trade. So we're going to back up AGRX because it traded earlier this week on Monday or Tuesday, I believe. So we want to make sure our time frame will allow for that. I'll go to 5 days and then go to where it popped off. Okay, so back here on Monday, it was dipped way down, and then in the pre-market leading into Tuesday, it started to take off. So I'm going to zoom in right here for you. We had this good pop off, 57 cents, and then it consolidated and then popped off to 72 cents. Okay. So I actually made this trade, and you can see my indicators are still on here. And this is how I based my trade off of this. I knew that the high pre-market was 72. And then it immediately came back down into the high 40s and 50s. My indicators, I have a lot of them, so I know it can be tricky, but if you watch my 1-hour momentum masterclass, you'll get an idea of what these indicators are for. My main priority is that all of them are green above red. That's why I have them color coded, and that my ADXR hits 25. So as I watch this, and this is patience too, as I watch this, we have this consolidation channel, and it all looks great to jump in. Oh, it's going to keep going up, keep going up. But consolidation can go either way. So we want to make sure that all of our parameters are correct. As we increase here, we have momentum above 0. Great. Our stochastic's a little bit high, but it's coming down. But we have a MACD that's up, and we finally have our ADXR crossover, but it's still a little bit low. We want to wait for 25. And that happens right in this area here. You see I have my buy a little bit early, but that's just because I finally got the indication of the stochastic turning around, plus all these were already in place. So basically this little consolidation right here was enough for me to go, okay, stochastic turned around, it's ready to go. So I bought in a little bit early, but you can see where the indicators say up, up, up. Green here is above the 20-day, which is above the 50-day. So we have all three of those that are in congruency. And then we buy around 60 cents. And it's almost impossible to catch this high. You don't want to lose any money either, but we get the turnaround right here. See from this mark, this last green bar, ADX down, MACD starts curling down, momentum starts curling down, stochastic starts curling down. So anywhere from this mark, to this crossover right here, which would be right in this area, you would sell, and that would be anywhere between like 80 to 82 cents, 83 cents. Oh yeah, 84. So anywhere between 80 and 84 cents, you would have sold, potentially making 20 to 24 cents profit. And one day, obviously times the amount of shares. And then that would be it. I mean, you can wait for this dip and consolidation, but then you get another dip and consolidation and another dip and then consolidation, right? And then another dip and then consolidation, and it just kept on going down and down and down. All right, so that's kind of my take on AGRX as far as how I traded that. You back out to these higher scales, and you can see that it really has no intention on continuing up. It now has an increasing ADXR with all these below, which means it's going to keep falling most likely. I'm not saying eventually it won't go up, but that's just not the type of trader I am. I'm not going to hold these things forever. The point is to make money and to get out. And so, again, there's not enough news in the world that says that's potential, right? Oh, they got an FDA approval coming up. They got this coming up. They got trials coming up. None of that matters to me. The point is to make money, follow the indicators, and get out. So we're going to see that's probably a pretty common trend amongst these other ones because they're all in the same category. NLST had a little bit longer run, and I think that confused people because it was a multi-day runner, 3 solid days of these gains, and that really gets people hyped up. But remember, your indicators are all going into overbought, as this continues to happen, which makes it a riskier and riskier move. So you can see that these just have these high spikes within these big falls. And that's just not a place you want to be in. Going to the 5-minute chart. And we're going to back that back up. All right, so when all this started taking place, we were down in these low 20s. That was like the leading into Monday. And you had this high, 20-cent gain pop in pre-market. Then it dropped, consolidated, and then in the afternoon on Monday, it started really taking off right into aftermarket again, leading into the pre-market of Tuesday and just giving solid gains right into the open. And then from that point forward, it was nothing but down. So if we take a closer look at this, I am a momentum trader. So my confirmation would have been right here on Monday at 1 o'clock. We would have been right about here. So if you look at all my indicators from top to bottom, you have the green 9-day above the 20-day above the 50-day. You have the ADX hit 25. You have this MACD crossover that's increasing. You have momentum above 0 that's increasing. And you have this stochastic pop-off that's increasing. So from this point, you have about 43 cents. And most likely you wouldn't have taken it into after hours because, again, you're trying not to day trade this because it's crazy what happens. But you would have taken 43 to about 63 just to get out before the close of the day because it consolidated right there. So again, that would have been 20-cent gain. If you're not happy with 20 cents of gain on a penny stock, then it's probably just not the play for you, because those are huge margins. And you see I'm trading on a 5-minute, not a 1-minute, because a 1-minute is obviously going to tell you to buy and sell at different times than a 5-minute. I think a 5-minute is still a good chart to base off, to get these solid gains and to get more gains than just a penny. I'm sorry, 1 minute, because if you don't have 25,000 to trade your account, you don't want to be in and out on a 1-minute chart, because you'll burn up those day trades really quickly. Whereas like this could be an hour, you know, every one of these is 5 minutes. You could be in here for an hour, hour and a half, and feel confident that you got the maximum amount for your day trade. And I think that's very important. And that would have made a lot of money for a lot of people, almost doubling their accounts, really. But again, very common themes, and you actually saw it with NLST, is that when these penny stocks get these big moves, they actually they actually put out news that they're putting out an offering, a public offering. And that's because they want to generate money now that their stock price is higher by selling it at a lower price. And that's just not good for shareholders. And it's very, very common that within a day or two of these kinds of moves that that happens. And, you know, even personally, I've seen this happen to me, and I've lost money because of it, because of holding overnight and waking up to these public offerings. And then, you know, all the profit you were up, you know, you go down just as fast. So I think, you know, for me, this just not worth it in this industry, especially biotech, because these guys aren't making money unless they put out a product that gets approved. And I think that's important to understand, that speculation doesn't pay the bills. So you really want to buy into things and hold them long term if they have a product that's selling. Day trading is fine as long as you do it like this. Fibonacci retracement on here, you can see that BPMX has been playing in this range from essentially 11 cents to 37 cents for quite a while, but it's basically been on this downtrend. Even this high that it hit was lower high than what it hit back here. And now it's already turned around and coming back down. So let's go ahead and take a look at what that looked like. All right, so back here, we're leading into Tuesday. I had consolidation through Monday. Leading into Tuesday, we got some confirmation right here that is going to continue up anywhere in this 17, 18 cent range, 19, 20 cent range, but then almost directly back down back to 17 cents, and then it had a nice run for the rest of the day. So even if you would have bought on that momentum, most likely you would have sold for maybe a penny higher, because these indicators did start coming back down. Now you could have waited and potentially bought back right about here, which was 19, 20 cents. And then you would have had 20 to 23, 24. So again, this one isn't as good. It didn't break out the same way the others did, but obviously a lot of potential to still make money. If you have a 5-cent gain on a stock worth 20 cents, I mean, that's pretty good. And then from that point forward, you had one more pop leading into, I believe it was Wednesday, and then it just came down after that. Again, if you want to be a long time holder and tie up your funds for years until these guys actually create something that makes them money, that's completely up to you. I wouldn't recommend putting your whole portfolio into it, or else you'll be there for quite a while with your funds tied up. And the big guy here that made the most money was INPX. And that's just simply because it was a 12-cent stock. Again, guys, look at the overall trend. Overall trend. This was a reverse split, so this was never really $18. It had a 1 to 30 reverse split. Down, 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 down. For the life of the stock, it's been down. So let's go into where the money was made. Money was made back here on Tuesday. Or 1 day off. All right, right here. Leading into Tuesday. So I actually was able to take this trade. I took it a little bit early again, but that's just because I am very, very familiar now with what I see and what I know. But that's not how I teach. I teach to wait for those exact confirmations because some things they're just not teachable. I've just been doing it so long that I would never want to put anyone else at any risk for that. But I was comfortable. I bought pre-market at 14.4, and then from that point forward, market opened and it took off to 22 cents and came back down, and it just rallied from there. This 16.49, because I got in pre-market, like my money was never really in jeopardy for this whole day. And because of that, I actually held this one through and let it ride. And I was actually able to sell at 26 cents on Wednesday. So in that rare instance, I kept, but that was only because I was basically bought in at the lowest possible point, and the odds of it getting back there were just slim during this with all this momentum, because what I do is I verify my trades on a higher scale. So basically, even though I buy in on 5-minute, if the hourly, like you can see right here, was just taking off, well, how long is that going to go before it starts coming back down? So with that piece of knowledge in mind, like if it were halfway in, like say it was right here when that move happened, then I wouldn't have kept it. But because it was just breaking out, even on the hourly, I was confident in holding it overnight. These are things that I can teach later on. It's again, it's a lot more than just simple explanations. It's got to be shown over and over and over. But I always confirm trends with the scale above, and I take entries on the scale below, unless it's a 1-minute or 5-minute, because those are just they are what they are. But if I were like trading on the hourly, I'd confirm on the 4-hour or the daily that the trend was going in the direction I wanted it to go, and then I would make my trade based off the 30-minute dip. So then I get the best price with the longest amount of runtime. Again, INPX, we're talking about a 12-cent stock literally just last week. So with that being said, you know, why would I want to risk holding this for so long when this has done nothing but go down? It's just too risky. But you get these pops right here, and you can see that, you know, it's basically 12 cents to a run of 27 cents. That's over 100% profit margin in a matter of 2 days. It's very, there may be potential for INPX to get another pop. We would just want to wait for this crossover on the ADXR, which is happening. MACD is still above here, but it's not by much. Momentum was coming down, but the stochastic is still facing upward. So it's possible in the next day or two that you might find a reversal or another pop for another, you know, test of maybe 20 cents or so, but we'll keep an eye on that. Last but not least, we want to show NIO. So I also noticed that a lot of newer traders go nuts over this kind of stuff. As a technical trader who's been doing this for years, I can't get excited about IPOs. Why? It's simple. There's no indicators. There's not enough time in the market for it to give us the indicators we need to tell us what direction this stock is going to go. So hype alone right now carried it from, I think, you know, $6 or $7 up to 13. I mean, that's really amazing. But, you know, unless I go down to a day trade, I could have taken it and come out, you know, a little bit at top, maybe $1 or $2 gain. But I definitely would never hold this overnight. Like, that's just, for me, again, the information I take in isn't fundamentals. It's not, what is this company about? What do they sell? How much money do they make? My trades are literally based on technical analysis. If there's news as a catalyst or earnings as a catalyst, that's great. You know, I'll use that to my advantage, but I never go out looking at company fundamentals to understand if it's a good company or not, because at the end of the day, the indicators are going to tell you if you can make money off of it or not, especially if you're not planning on falling in love with a stock and staying in it for a long time. Then there's no point in doing all that research. It just doesn't make sense to me. I'm successful enough trading and teaching people how to trade based off this alone. And again, if you're wanting to learn these strategies, I highly suggest watching my 1-hour masterclass YouTube video, where I literally break down the indicators I use. There's been some adjustment since that video, but that video is the foundation to the trading. So even following that is going to make you a more consistent trader than if you're just following the herd of sheep that are telling people to buy certain stocks. If you're interested in portfolio building, currently right now, I give a lot of advice for free. Just message my Facebook page at Free Stock Advice, and I give a lot of information for free. The one thing I do sell is a spreadsheet that's automated with, it's completely formulated, where you just do some simple input on your portfolio that you currently have, and it will tell you to increase shares or decrease shares, buy or sell, automatically, just by, as long as you follow. There's a video on here to watch. It's a tutorial on that spreadsheet. As long as you have everything input correctly, then it'll tell you when to buy and when to sell based on the current portfolio value. So it's a dollar cost averaging system, which means you're going to increase shares as the market goes down, and you're going to sell off shares as the market goes up. But it's going to tell you how much to sell and how much to buy, so that your portfolio stays with minimal losses at any given time. I currently sell that on my website, www.profitstocktrades.com. And it's selling right now for $79, and that's just a one-time deal. You get access to that spreadsheet, you download it, and it's yours to keep on your computer. And then you know, you just plug and play. And if you have any questions at all with that, again, just message me and or email me at greatstocktrades@gmail.com, and I'm happy to answer any questions anytime. So I hope you guys enjoyed this. Again, the big takeaway from this is that I don't keep penny stocks for a long time. There's just not enough backing their spontaneous pops to hold them for a long time. But they are great day trades. And since anyone with an account under 25,000 can only have 3 day trades and a 5-day trading period, it's important to play them very safely. I hope you guys enjoyed. If you have any other requests or technical analysis questions, you can comment, or again, go to my Facebook page and message me. That's the fastest way you'll get a response. And I am happy to help teach anyone to trade better. I mean, that's what I like to do. I like to teach people. And again, I do a lot of it completely free. Only my high-end clients that I work with one-on-one personally pay me for consultation purposes. But for everyone else that just has questions about stuff, I'm answering them for free pretty much all day long. So I hope you guys enjoyed. Have fun. Keep learning and ask questions.